To me, it just is telling you that things are breaking. And I don't know. I think that this is just the beginning. We saw 12.5 million ounces were transferred out of the COMEX registered category on November 26th. So, where's it going? Who's buying it? How caught are they? These are the things that I would be focusing on right now. To me, that's the most important thing to talk about today. I would just simply say that if a market loses trust in how prices are discovered, or if it can quickly shift the rules, so too will the price discovering. It will shift elsewhere. And to me, all roads lead to the same place, and that's Shanghai, which becomes the price mechanism for physical silver. It will take over for the COMEX. And, when you play these games, we've seen it now in London with the nickel market. We're seeing it here. It's what they did to the Hunt brothers. They changed the rules. They'll raise margin they'll do all of these things.
Andy Schectman exposes the breaking point in precious metals markets. With 90 million ounces of silver delivered off the COMEX since October, physical demand is revealing the truth. Paper derivatives are backed by nothing. Silver could hit $96 or even $600 as Eastern markets take over price discovery. Meanwhile, stable coin legislation connects to Tether's gold buying and a coming digital surveillance state. With Buffett holding $400 billion cash and insiders selling billions weekly, smart money is positioning for a reset. Most will wake up shocked when gold and silver have already soared. Thanks for watching. Subscribe to Fine Metals for more updates.
Well, today's day 3. I don't have the numbers yet, but 2 days into the December delivery month, and there's already been 23,970 gold contracts that have stood for delivery. That's 2.397 million ounces, and plus 8,305 silver contracts, or 41,525,000 troy ounces issued and stopped so far, and the month has just started. It's also relevant to note that in November, which I would say was not normal, the silver deliveries ended the month at just under 20 million ounces, about 19.7 million, which it's really crazy because November is not a scheduled delivery month for either silver or gold. There was 1,267,000 ounces of gold delivered. Issued and stopped is the correct terminology. But the first day, this month, the December contract, day 1, we saw 7,330 contracts stand for delivery in silver, which is 36, almost 37 million. That's more than $2 billion worth. And although it's not a record, it's close to it. April was the biggest record of just under 12,000 contracts. But to see a 2-day, that's day 1 and 2-day obviously added more, but it's just insanity where there's already been 2.4 million ounces of gold and almost 42 million ounces of silver delivered in 2 days. This is the same type of volume that we've seen all year long. And, it's funny, you and I started talking about this in 2020 before anyone did. And now it's just mainstream mainstream in our business. And I think this will continue until it doesn't, meaning until stuff is just depleted. And it's becoming more and more obvious that this is an imminent deal. At the same time, you have one of, if not the largest short position in COMEX futures market, along with a massive short position in SLV, one of the largest ever. And at the same time, you have the LBMA, which is running on fumes. And, it's a situation where the delivery via mechanisms are breaking down. Almost 90 million ounces have been delivered off of COMEX. Big pockets of cash to continue to suppress the price naked. It's now an existential threat. And you're seeing that. The rumor is the reason they stopped is there's one big trader who took possession and would not roll it over a stamp for cash delivery. Perhaps an Asian trader who wanted over 400 million ounces of silver. Give it to me. And so Oh, all of a sudden the cooling breaks down over Thanksgiving in one of the most thinly traded markets of all. So there's virtually no activity, but just those servers broke down. Right. So the point of it is that this signals, just like the LBMA said, sorry, it's not L plus or T plus 1, it's T plus 8 weeks. Right. We don't have enough manpower or trucks. The Western system is crumbling under their own narrative, and they are losing trust. And that ain't good when a system is completely built on trust and it starts to, as the water recedes, what's the old adage, you see.
Warren Buffett said when the tide goes out, you get to find out who was swimming without swimming trunks. Yeah.
Right. And I think that's going to be a grotesque picture before it's all said and done. And that's why I think you're seeing a different narrative unfold amongst these banks, that maybe the game is over and survival would mean breaking ranks and covering and getting out. You see one of those European banks do that, and then the whole game just implodes as the price skyrockets and shorts get squeezed and they cover, pushing the price up higher. This is a big deal, and I think it's just beginning right now. Well, it's interesting. The technical analysis would say you take the cup and handle when it breaks through the handle, which it has at over $50, that you take the top of the cup in 1980, which was 50, the bottom of the cup, which was $4 in the 90s, and the difference is 46. You add it to the top, and that would say $96 would be the next technical resistance level, if any, or that would be the projected next place to go. And if you take a 42-to-1 ratio right now, or even call it 45-to-1, where it's averaged for the last 100 years, the silver to gold ratio, even though it's been coming out of the ground for 5,000 years, it's 16-to-1, and now it's 7-to-1, meaning it's depleting in nature. The price ratio, largely because of, in the Western world, gold's role as a monetary metal and silver's role in industry, it's average about 45-to-1. So you take gold today at 42.40 and divide by 45, and what do you get? 42.40 divided by 45 is $95. Well, isn't that interesting? That would be where it would tell you to go, where you take the top minus the bottom, which is 46, add it to the top, that would say $96. So, I mean, if you were to see silver at the end of the year at $96, it would not be crazy at all. And if you take 42.40 and divide by 7, it's going to be somewhere around $600, 605. As insane as that sounds, that would match the geologic footprint right now. So yeah, I think silver is the asset of a generation. And I want to always hammer it home. I'm not telling people to buy it to become wealthy. It is wealth. And the biggest money in the world is showing you that. The sovereign wealth funds and the central banks, who have now largely reclassified silver a critical mineral. The U.S. government has. The EU did it in 2023. China just did it, and they are restricting exports. And China, as we've said ad nauseum on your show, the second largest producer in the world, is flying to Peru and Mexico and buying doré and concentrate, paying twice what the rest of the world will, and ship it back to refine it. If they're the second largest producer, then why the hell are they doing that? Because it's worth far more than the currency used to buy it. The prices are wrong. They've never been allowed to reach full price discovery when you have the largest concentrated commodity, concentrated short position of any commodity of the 1,000 plus traded on COMEX for years. It just speaks to the why. Why would it be the largest short position in this tiny little commodity? It's not for these banks to make money, is it? Sure, they do, but is there something bigger behind it? And we've talked about that forever. So yeah, what we're witnessing right now is the inability of the players that have used the Western dominance, which is big checkbooks. There was a poll taken, I read it with great disdain, that 60+% of Gen Zers say cash is cringe. No one takes cash. It's cringe, whatever the hell cringe means. But I'll tell you that we are moving to, in that vicinity, that cashless society that we talk about, that always people laughed at. Yeah, that'll never happen. It is happening ever so slowly. And this will be another example of it. So you're right. I don't think there will be any opt-outing, and cash will be something that will go ultimately the way of the dodo bird, and it will just be gone. But not there yet. Bo Hines, who was Trump's crypto advisor until August, is now the CEO of USA Tether, which is already Genius compliant and will get the lion's share of all the stablecoin issuance backed by U.S. Treasuries, which, to your point, gives synthetic demand for the Treasury. But the interest on those coins is not transferable. If you buy something and the stablecoin is created backed by Treasuries, you spend it, the stablecoin gets burned. It's done. But the interest that was generated on the Treasury is not transferable to the holder of the stablecoin. It has to be kept by Tether, who then is buying gold. They have almost $13 billion in gold. They were just at the Beaver Creek Mining Summit. So there's a lot to say about the stablecoin in terms of the ultimate benefit to the gold holder, which devalues the dollar, which we've talked about. That's what they want. The debasement trade. You haven't seen mainstream talk about the debasement trade. Makes paying off your debt easier. And we've talked about how they could develop a roadmap to bring back manufacturing. That is a key part of it. The continuation synthetically of demand for the Treasury market, which has lost demand and is continuing to lose demand, but that synthetic demand will then be used to take the revenue from it, drive from it, not give it back to us who hold the stablecoins, but buy gold with it. And I wouldn't be surprised if there was a wink, wink, nod, nod between Trump and Tether. You're going to give us that metal. You're going to sign a contract discreetly, maybe even through this exchange stabilization fund, and you're going to sell it to us at some point. Maybe. But anyways, I digress. When you talk about what it could have in store for you, yeah, they have AML, KYC, and KYT compliant technology built into the software. Know your client, KYC, AML, anti-money laundering, KYT, know your transaction. They will know who you are, where your money came from, and what you're buying. And you're right, it is a central bank digital currency masquerading as a stablecoin. The big difference is that instead of, it's the CB, there's no central bank. These are independent third-party companies. But isn't it interesting that Trump's crypto czar is now the CEO of this new division that is going to issue the USA Tether tokens? And I think the big money understands that. And on the other side, maybe this is why you see Buffett in $400 billion in cash, and why you see all the insiders selling every single week, $2 billion a week for the last, I don't know how long, and Bezos and Zuckerberg and all of these people selling. Maybe that's why, because they know what's coming. When price discovery really truly is allowed to manifest itself in a world where money isn't free anymore, and the ramifications of it start to profoundly expand. Very quickly, I think not only will you see those assets that are ridiculously priced start to deflate, but you will also see those that have been suppressed move much higher, as there are very few safe places left yet to go. And maybe that's why we're seeing these massive deliveries. The people at that level of wealth and sophistication don't do it just for the hell of it. They know what's coming. They're 2 or 3 steps ahead of everybody. That's why I would say do what they say, don't do what, or do what they do rather, don't do what they are saying. But it takes so much effort to figure that out that if you're not researching the way you and I do every day, you won't even see it. And it will just be one of these things you'll wake up one morning and say, my God, can you believe how high gold and silver have gotten? In fact, I got one today. I got a text from my buddy, Steve. I call him Flip. And he says to me, I just saw the silver prices today. Wow. How high do you think it's going to go? I should have bought when you told me to at 22. Well, that's exactly what you're going to see happen. I think it's going to go much, much higher, and people will just wake up to a new reality. And at that point, the big money will have already been long since positioned. Well, I don't know if it's even defending anymore. It seems to me that this is what they want to do. This is their decision to do this by raising rates. The opinion is that they're going to raise rates again here in December and probably in January. And the truth of the matter is their economy is under serious pressure. And this could seriously affect global markets harder than people expect, because for years or decades, interest rates were kept near zero. And all of the money, whether it be Japanese pension funds or traders around the globe, would borrow, for example, yen at near zero, and then use the excess or use that free money to buy things like U.S. government bonds. And so there's over $1 trillion worth of these bonds that are owned by the Japanese pensions that are now, when you factor in the carrying costs, and a rising yen and higher rates, these bonds are now basically underwater, and they have to liquidate, and that's what they're doing. This kept the yen weak. It kept the dollar strong. It kept money flowing around the world, but it also is now coming home to roost, where these higher yields that you're seeing in Japan, along with inflation rising in Japan, they're under pressure to raise rates, and they're doing it, and that'll make the yen more expensive to borrow, which makes those already unprofitable carry trades even more unprofitable. And I think these funds and investors are now unwinding their positions. They're selling their bond holdings, and they're bringing everything back to Japan, which is going to put massive pressure on the bonds in existence and the currencies around the world, because it's been a piggy bank to the world where you could borrow at nothing and buy Nvidia, Bitcoin, treasuries, anything. And that has been, Japan needs to bring back this money to support its own economy. And it's going to start doing it by selling bonds. And the question is, how quickly will it unwind? Will it send the dollar crashing? Will it send rates spiking? And when you realize, again, going back to that same thing about trust, that the whole U.S., the whole system is already under pressure. I think this has the potential to trigger massive financial problems if the unwinding of the carry trade is anything other than orderly. And rates are going higher in Japan, would be my belief.